to today's Daily Dose of Market Insights. Very good morning. Today will be the Tuesday, the 9th of September 2025, pardon me. So before we jump straight into today's Daily Dose content, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So, as usual, let's have a quick recap what has taken shape yesterday, as well as in today's early Asia session before the start of our daily dose at 11 a.m. Singapore time in terms of key economic data releases, relevant news flow, i.e. event that has a significant impact on the intraday movement on the broad-based cross asset classes, and let's also have a review of the performance yesterday of these broad-based cross asset classes as well before we jump into a chart of the day for today that I like to feature you guys based on a intraday technical analysis perspective. And as usual, we will wrap up the session with what are the key events and data to look at for today. All right, so yesterday, in terms of the performance of the major US stock indices, has continues to trade firm, exposed non-farm payroll data where initially there was a dip, but this dip managed to help according to our intraday technical outlook view, which I shared with you guys yesterday on the SPX 500, the Nasdaq 100, and as well as the US Wall Street 30, which is representing the Dow Jones Industrial Average. All of them managed to bounce off from their respective key pivotal short-term supports. And yesterday, they continues to inch slightly higher, where the SPX managed to close at 0.21%. The top performer, which is the Dow Jones which is the Nasdaq 100, pardon me, at 0.46%, and the Dow Jones Industrial Average almost on the par with the SPX 500, which is up by 0.25%, and the Russell 2000 up by 0.16%. So net overall, what we could see over here is that the heat map of the S&P 500 continues to be rather healthy over here. So yesterday, top performer is within the technology space, where we start to see positive return of 0.65% on Microsoft over here, and the one that is underperforming within the technology space is Apple, which is down by negative 0.8% ahead of today's key risk event that is centered on Apple. So later I'll share with you what are the key risk event that is being centered on Apple, and materially it could also have an impact on the Nasdaq 100 and the S&P 500 intraday price movement thereafter. So later I'll share with you why is it important. All right, so if you look at the heat map of the S&P 500 in terms of sectorial performance, so we know that the S&P 500 is broken down to 11 key sectors. So yesterday we see the top performing sector centered on a more cyclical movement in the health of the US economy. So technology, basic materials, consumer cyclicals all outperformed yesterday with gains of 0.8%, 0.61%, and 0.59%. And the underperforming sector are the defensive sector, which is healthcare, down by negative 0.4%, real estate down by negative 0.6%, and utilities down by almost 1%. So this is also in line with the upcoming highly anticipated Fed dovish pivot that may take shape next week on the 17th of September FOMC meeting, which I've already covered in greater detail in my yesterday's daily dose, where I share with you the market changes or perception that the Fed is likely to be more dovish based on the CME Fed Watch 2. So I will not go back in that particular content again. So for those who want to find out more, do take a look at yesterday's daily dose at the start, where I share with you the pricing odds of the Fed Funds futures traders and how they actually price the Fed Funds, the FOMC probability of the FOMC interest rate cut going forward. Right. And also in the FX market, we see dollar continues to weaken. So this is the 5-day rolling performance of the US dollar against other major currency. As of now, we are speaking 9th of September 2025. So the dollar continues to trade weaker, ex-post FOMC, ex-post non-farm payroll data, where the weakest one will be against the Swiss, where the dollar Swiss is down by negative 1.5%, trading below the lows of the non-farm payroll data released on last Friday, followed by the Kiwi. The dollar Kiwi is down by negative 1.3%, and the dollar sterling pound is down by negative 1.22%, followed by the dollar Aussie, which is down by negative 1.9%, all being supported by the US Treasury yield premium that is being compressed versus the rest of the world. So basically, this line at the bottom over here is the 2-year Treasury yield. Why 2-year Treasury yield? Because the 2-year Treasury yield is the most sensitive yield among the US Treasuries that is subject to changes in the monetary policy stances by the US Federal Reserve. So this 2-year Treasury yield minus off a 2-year sovereign bond yield, a weighted average between the key major developed economies, Germany, UK, Japan, Canada, Swiss, Australia, and China, that are just basically do a weighted average of this 2-year Treasury yield of these sovereign bonds. The 2-year Treasury yield premium against the 2-year spread of this 1, 2, 3, 4, 5, 6, 7 developed nation economies has been inching downwards. All right, over here, that means indicating that the yield premium of the 2-year Treasury note has started to shrink against the rest of the world, putting downside pressure on the US dollar. And what's interesting over here is that despite we start to see some localized negative news flow on one of the pertaining to the Aussie dollar, but what do I mean by that is this particular Westpac consumer confidence change in Australia and the business confidence compiled by NAB, which is out earlier today at 8:30 a.m. and 9:30 a.m. respectively. They came in way below the previous month print. So for Westpac consumer confidence, the change, it actually came in at negative 3.1% month-on-month change from 5.7% positive change that was in the previous month of August. And for even the NAB business confidence for August also came in way below the previous month print of 8, and it came down at 4. But nevertheless, it doesn't derail the ongoing dollar weakness against the Aussie dollar. So if you look at the situation right now based on the 1-day rolling performance over here, so this 1-day rolling performance, the dollar Aussie didn't actually inch upwards that higher. So it continues to remains lackluster, representing ongoing dollar weakness against the Aussie dollar. So market participants are now more focusing ahead of a much more dovish Fed going forward, given the fact that they are being late in the interest rate cut cycle since the start of this year. And over to Asia today, over here, what you could see is that in Asia, we do continue to see positive price action in the major Asia Pacific stock benchmark stock indices. The Nikkei 225 managed to inch up higher to 0.2% over here, printing a fresh all-time high earlier today at the start of the Japanese stock market trading session at 44,185, and thereafter it did a minor pullback so far. And also the Hang Seng Index managed to burst up higher to 1.25%. That's within our expectation as well. So those who want to have a clearer short-term technical levels to look out for, do take a look at yesterday's daily dose, where I highlighted both in greater detail on the Hong Kong 33 CFD index and as well as the Japan 225 index over here. So given the rather weak consumer sentiment data and as well as the business sentiment data of Australia that was released earlier this morning, it do have some kind of negative impact on the ASX 200, which is down by negative 0.6% as we are speaking right now. over here. And so and also one thing interesting over here I share with you guys is yesterday we do have a key risk event that has taken shape in the Eurozone, which is the resignation of the French Premier, not the French President, mind you, it's the French Premier, which is the Prime Minister. So the France Prime Minister Bayrou is being forced to resign after losing a confidence votes in the French Parliament over here. But what's interesting over here is that it actually didn't create a major risk of effect on the risk assets of Eurozone. So what do I mean by that? So what we could see over here is that in the key Eurozone benchmark stock index, which is the Euro Stocks 500 index, managed to close higher yesterday at 0.84%. And even the Germany DAX, which is also up by 0.89%. And the CAC 40, which is the benchmark of the French stock market, is also up by 0.8%. So it doesn't seem to have any material impact on the respective financial markets of Eurozone. So one thing I take a look at is looking at the yield spread. Okay, give me a minute. Where is the yield spread? Yeah, this is the yield spread between the 10-year France sovereign bond versus the yield spread of the 10-year German sovereign bond. So we know that it didn't actually spike up. So there is no risk that the 10-year sovereign bond yield is spiking up against the 10-year German sovereign bond yield. So it's still being capped by this descending trendline resistance in play since 28th of November last year. All right, so this is roughly about what a 10-month resistance that hasn't been broken out yet. So that actually doesn't create or doesn't trigger a risk of material impact on the Eurozone, and thereby allowing the euro dollar to trade higher after last week bullish breakout from a key resistance level or key technical element level. All right, so that is the first segment of today's daily dose. Let me move on to the second segment, but before that, let me expand my screen so that you guys can have a better view of the chart. So very quickly, the second segment of today's daily dose will be a chart of the day. Right, so this chart of the day I want to share with you guys will be the euro dollar over here. So this is a 1 hour chart of the euro dollar. So for the euro dollar, last week it managed to stage a bullish breakout. Over here you could see on my screen, which is a former medium-term trend line from the 1st of July 2025 high, which is also a 52-week high as well, that kept previous up move on 24th of July, and as well as previous up move on 22nd of August and 1st of September. And last Friday, it did a bullish breakout, pullback, retested it, and positively managed to inch a minor bullish reversal in yesterday's trading session as well, where it came in within our anticipation in our technical analyst outlook that I shared with you yesterday. So for today, the euro dollar will be my chart of the day for today. Why? Because it continues to exhibit bullish momentum as it did a positive follow through after a retest on that key technical level at the 117 figure level. So being said that for today, I will have a tightened short-term pivotal support on the euro dollar, tighten it to 117 figure level above 117.90, which is the swing high area of 24th of July, will potentially seek out the next intermediate resistance level, which is the 118.30, the 1st of July 2025 swing high, and as well as its current 52-week high. Above 118.30, potentially may see a higher highs towards 118.90, 119.10, which is the 30th of July, 3rd of September 2021 high. So this is close to about a 4-year high, and as well as a Fibo extension cluster level, and the upper limit of this ongoing minor ascending channel that is in place since 1st of August 2025 low. However, a bearish breakdown below 117 figure level will negate today's bullish bias on the euro dollar to see another round of minor corrective decline sequence expanding further towards the downside to revisit the rising 20-day moving average at 116.65 over here. And bearing in mind over here is that we do have a risk event that is taking shape in Eurozone this week as well, which is the ECB meeting that is will be out on Thursday, and also the release of the core US CPI data, which is out on the same day as well. So I'll touch more about that in my next 2 days of daily dose of market insights. All right. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today is Tuesday. So for Tuesday, terms of economic data, we do have at 10 p.m. Singapore time, which is the Northbound payroll annual revision. So this is not the monthly release. This is an annual revision for last year figure. So last year figure previously as a whole was at negative 818K. So if this figure is being revised downwards much more drastically, that means much more beyond negative 818K, that could potentially put downside pressure on the US dollar. So that is out at 10 p.m. Singapore time. So an event to look out for. And thereafter, before the start of our daily dose on Wednesday, which is at 9:30 a.m. Singapore time, it will be the release of Chinese economy inflation trend, which is the inflation rate for August, and as well as the producer price index for August as well, the PPI for August. So these key metrics will be scrutinized to actually gauge what is the current risk of this deflationary risk spiral that previously has been in play in the Chinese economy since post-COVID period over here that could have an impact on the Hong Kong 33 CFD index. And one more particular event I'll share with you guys will be Apple. So why Apple is important? Because Apple today will release its latest flagship product, which is iPhone 17, and as well as they say that it will release new watches as well, followed by a heart rate tracking AirPods. All right, so this will be an event, a key flagship product event today. Time will be at 1 a.m. Singapore time, 10th of September. Right, so it's early morning Singapore time. And why this event is important? Because it could influence the share price of Apple, and Apple is the third biggest market cap stock in the S&P 500 and the Nasdaq 100. All right, so with that, that sum up today's daily dose of market insights. Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.